Hello guys, glad to have you on board again today. Unfortunately, it is not going to happen today. I've been waiting for quite some time, but I still don't have my order book filled with the depth of market. That's exactly what we need. So I've got everything else. I got the futures data inflow. I've got the account open and funded, so everything just works just fine. I can trade, but the problem is I don't have the order book. So I still need to fix that problem either with a data provider or with TradingView. I've been asking both sides to try figuring out where the problem is in between. So unfortunately, that is not what I expected, but we have to deal with it anyway. So we're gonna have to wait for this to be solved, and until then I have to just let it go. Hopefully by tomorrow. I just don't know. I just sent a couple emails and I've got to wait for their answers. Yes, put it on hold until further notice, hopefully tomorrow. So what we're going to do instead is we're supposed to do some intraday trades today. I'm not going to give you anything to do regarding the SPX. This asset's just dying out of a potentially bullish trade. It was just like waiting for something to happen. We, for now, reject the previous historical high. It's a strong resistance, therefore, and the question is whether we're going to break it or not. So it is hard to say. It's the kind of market that will trade upon the actual news flow. So whatever shit this is, Trump tweeting or whatever, we've got a G20 later this year, we've got the GDP coming over as well. So the market is just waiting for those things to eventually decide what to do with the current price area, which means absolutely no way you can profit from technical strategies in here. Moreover, remember that for the previous month, we've had the Fed supporting the prices in a very stupid manner, and investors are basically not trading against the Fed. So it's been breaking every rational shorting decision and breaking through every resistance like it was nothing. So it is not technical, therefore I strongly suggest that you just stand by for a bit on this asset. If it gives us some strong bearish signals, for example, we build this range, if we're about to bearish breakdown, then that will be interesting for some reason to eventually try something out of here. But as for the moment, we're just trading close to resistances. We might be about to reject, let's be honest, all right? We could be like that, all right? So either it's just sideways action before catching up on the resistant context into new historical highs. Option number two, we get the fuck out of here with lack of buyers and we start breaking supports, reaching out to longer supports. Like just the 1 hour support context is pretty much lower than where we are. Just to make it simple, it's just 3% lower. So yes, could we crack down price for 3% in just a glimpse? Yes, we could do it. We could very well do it. The question is there's absolutely no liquidity to support prices in this area. So if we were to go down there, it's going to be brutal, it's going to be a breakdown. But is it going to happen? I don't know. So until we actually break down this range or build a decent breakdown structure, there's nothing I can tell in here. So it doesn't feel technical to me. It feels just like a dead body waiting for something to happen. So I'm just doing accordingly. I'm waiting for something to happen. If it goes bearish, I'm probably going to join the train. If it goes bullish, then I'm going to wait for further targets to eventually try something else. So waiting for something. I don't like to do this, but that's how it is. Instead, I would like to talk to you about Bitcoins, because I think right now that's the actual asset that's moving the most, giving us some interesting stuff to trade. It's moving a lot, and it's trading very interesting areas in some H1 and H4 contexts, which means there's something we can do in those areas. It's very dangerous, obviously. It can be volatile, stuff like that. We're still trading facing a bubble, all right? So what we're going to be doing today, instead of trading the SPX like we usually do, I'm going to show you that this thing works out of basically every fucking asset. All you need to care of is basically following the same old strategy rules, which means you need to have a long-term framework of the market structure. The thing is, when we do it with SPX, we have a look at, with SPX 500, we do have a look at the caching market structure on a daily basis to highlight some potential gaps that may alter short-term signals because they act like magnets. All right? So you should know about this thing. Sooner or later we're going to make a show only about gaps. So anyway, when we do SPX 500 or the future contract, we have a look at cash market SPX. All right, now we take care of Bitcoin. All right, this one has no gaps. All right, this one is trading 24 hours 7 days a week. So the thing is that what can we do? do we have some gaps in some kind of asset that is Bitcoin derivative? Yes, there is, the Bitcoin future. So yes, we're going to have a look at BTC futures market in here because there will be gaps, just like we're looking at the gaps in the cash structures of SPX. So what do we have in here? Oh my goodness, yes, two really freakingly open gap. This one has been filled in the motion, all right? Reason why I was selling in here, because that could have been what we call an exhaustion gap, like we try to rise, the gap is filled. We've done that twice in a row, suggesting this generally is end of movements, but still the bulls are raging. So they called for another gap to open. This one hasn't been filled, so it's the second bullish gap in a row. Let's be honest, we generally don't make more than two in a row. The second one generally gets filled. The reason why I don't think this weekly gap is gonna sustain longer than what we do trade right now. I think we're gonna probably fill this one, and worst case scenario, we could even do what we call the Iceland reversal. So this is the reason why I'm pretty much aggressive right now with the Bitcoins, because I think the current tradable area, which is a strong resistance, let's be honest, all right, this is where the beautiful glitter things happens, when the beauty happens, when we got in the top area of the range, the top 50%. We're exactly trading 50% retracement of the crashing structure. So getting on top of it is gonna bring some huge greed. And the question is, do we really have what we need? I don't know. I don't have the answer. Maybe we'll start trying to dip a toe into positive territory and eventually reject right after. I don't know. All I know is that this area is an area of interest. We're getting there with two gaps, two consecutive open gap. All right, it is not just a gap that we've been trading a few days ago. It's an open gap that we left in here, generally the sign of gap that we fill and then reverse out of. The parabolic scheme structure still says, all right, we're definitely in a bubble, we're definitely into a resistant context, so it's not about time to be euphoric, mostly about time to lock on some gains. That's a nice job we've done with cryptocurrencies once again. Remember that the major strategy was to buy the lows, buy and hold, buy the dip. And now we're about to sell the ribs. It's more likely this, all right? That doesn't mean sell it all or even short selling. And it's not even the case in a mid-term to long-term perspective. The thing is that at some point, risk-taking has to be rewarded, which means it's nice to have gains, but if you don't take them, they can pretty much vaporize rapidly, especially when we're in this kind of structure, which is a parabolic scheme. It is exactly like a Ponzi scheme, which means it rises because people are rising exposition, people want to get in because they hear about it, they think it's going to be easy money, stuff like that. So they ask in because there are crazy profits to make until the guys are asking for the profits. And when some people are asking for, there's not enough people to sustain the parabolic scheme. So it's just like Ponzi, right? When people are asking out, there's no one else to pay for their gains. So prices are rapidly falling apart, and all those beautiful gains end up disappearing, or even worse, reversing if you bought late in the structure. If you bought early, you've got nothing to scare. But if you bought late, let's say you've got an average entry price at 9.2K, oh, you're in great danger. We can be there in just a few hours. It can take less than 4 hours. We just collapse 40% prices, and I wouldn't nearly even be surprised with it. So let's be aware of the risk. That's what I'm teaching you guys. I'm a speculator. I manage risk, so I know how to do my goddamn job. There is a crazy high risk right now if you're buying. That doesn't mean we're not going to go slightly higher. All I'm saying is that we're below resistance, and as long as we are not buying. So I'm trading short because there is an area of support. I'm going to get down to this. All right, so caching structure is definitely one of the arguments I'm using right now to reverse this market, because I think we're going to probably build a resistance in here, and the question is whether we'll fill this gap and go bullish again, or worse than that, building the Iceland reversal like we trade in here all week long, and next week instead of gapping up, we're gapping down, and that is not going to be pretty, because that is a bearish and a strong bearish reversal structure. It's very, very speculative at the moment. It means that we need to stay there for an additional 3 days until Friday closing this market. And if we reopen on Monday bearish, then this is where the structure gets activated. This is where the ugly part shows up. It means that strong bears are holding again prices below 50%. That wouldn't necessarily be a good sign for the future. But still, that's possible, but I wouldn't say that's the most likely scenario. What seems to be the most likely scenario to me is most likely, remember that by the end of the week, we're going to have monthly candle closes as well. So have a look at what it looks like in terms of monthly candle close. All right, so if we close like that, oh yes, that's gorgeous, that's bullish. We're probably going to go a little bit higher by next month, because that's generally the kind of candle that we first retrace a bit, but we're going to buy the dip. All right, option number 2. Something goes wrong, we get bearish, we retrace back to 10K or whatever this is, and we're going to have a nasty doji structure, lower shadow, upper shadow, basically mystery. And you need to know something, the market likes mystery. So I would say going below 10K by the end of the week, just to restore some mystery out of monthly charts, seems like pretty rational to me, because what we're having here is nothing close to a bullish market. Since the futures market has been opened, it's just been a bloodbath. So if you think it's going to end just like that because the guys are FOMOing right now, I don't think it is. So risk management is all what this is about, and monthly candle close is all the big background we have in here in terms of technical structures from the overall perspective, right? The daily and weekly scenarios. We don't take any other information out of this. That we have a monthly candle close, that the close is for now the most bullish it could be in a market that has been bearish since then. So quite questionable kind of close. At least the 5 next day, the 3 next days are going to be massively impacting on this market. Now we get to the actual market itself, right? The futures contracts, the equivalent. So in here it's just the BTCUSD all by itself, and we do our job. All right, we go 1 hour, just like we do for SPX, and we give a fucking context to this market. So what do we have in here? What does this look like? Let's first of all delete the prices. Remember that you guys are better identifying context whenever the prices are not visible. It avoids any biases we could have. Let's give a name to this. What is that? Let's be honest, it's not really complicated. All right, bang, 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 bang. Look at this trend channel. It's not even existing. It feels like a video game. There's drawing lines or whatever. So this is a bubble. Definitely it is. You don't even overthink things. This is clearly a bubble. This is where you got the trend breakout. This is where things get out of control. This is the volatile area, and this is the final excess. So the bubble is mature. All right. So can we trade this bubble? Yes, we can. Even though it still remains pretty fucking dangerous because it's still a bubble, but it is mature, which means the breakout occurred, the final excess is in here, where when the things get out of control and gets parabolic. Then we can also see that the contexts are now folding each other again, which is a good sign, which means we can speculate. Still very dangerous, but we can trade. All right, so we've got our context. We're in a late stage bubble market. Very dangerous, but still we can sell it. We're into resistant context. We've got a target. This is a volume profile area. So definitely we can do something. First of all, we need to assess this as well. We've got a context alert, which means we need to have a look at the fucking 4-hour context before we actually make a decision out there. All right. Oh, we're also trading the daily chart context. All right. That's what we figured out. We're trying to destroy the daily context. And once again, have a look at this. How does that look? Breakout is in here. We can see this. This is where it gets out of control. This is final excess. So do you know where this ends? No, you don't. It can go a little bit higher, but still, you know, it's very late stage. It's not about time to buy. All right. Not even a damn stuff that you can buy in here. All you can do is just profit take or let it go. All right. So you don't buy right now in a swing perspective. That's not even a question. We're trading 50% Fibonacci retracement, which means, all right, this is a resistant level, and we can go back to context if we fail in here. Second stuff, you should have noticed this, all right, which means we do have a breakout target, and we're in a range. All right, let's be honest. All right, you can assess that being whatever this is, whatever you think this is. This cannot be anything but a range. So we're looking at selling entries. We're definitely going to sell close to Fibonacci retracement, 50%, 61, 76. What this target says is that if we go there, 76% is a mandatory selling entry. Mandatory, which means even I, with my buy and hold, I'm going to sell them all in here and go reverse. If we go there straight line, that's what I'm going to be doing. All right. If we're reversing here because the bubble is mature, yes, definitely, I'm going to profit take this area. That's what I already done, so I'm not doing it again. Next profit taking area for me is if we go 13.5K. I'm going there. I'm probably locking another 15% gains on my buy and hold, and if we go there, I'm entirely out. All right, that's a range. So if we reach out to the target, I'm short selling, not even a question. I'm out and I'm selling. I'm going to sell again, just like I sold the Bitcoins back in the crazy bubble that everyone thought was the future, whatever this is. All right, we're going in there. I'm going to take it all out and start selling. So that's the plan. All right, we're trading daily resistant context. All right, so the 1 hour, as we say, is a mature bubble, but we don't know if there's still some room. So we're going to trade this 1 hour context, but we know that this is a daily signal. So whatever we do today must be further than just a daily trade. If you sell, you must take like 20% of this trade size to hold the bearish entry just for further targets, daily targets. All right, that's what you need to understand. We're trading big game in here. We're trading swing trades. Still, we can do some intraday because we're into resistant context. All right, so what we do in here is to set the motion. Bubble, what are the core informations we need to sum up in here? We're trading short-term bubbles into a daily resistant context below 50% retracement of a crashing structure. Right? That's the context. So we do trade an important swing reversal area with a mature bubble structure in H1 time frame. So we can trade bearish, dangerous, so we're going to use tiny leverage, but still we're going to look out for short entries only. Now what we do, now that we've got our context and or risk management alteration, we're going to go to the 15-minute charts. Right? And we're going to look out for short-term structure and the areas in which we're going to trade intraday. So let's do it. We put back the prices in motion, and what do we have in here? Does that correspond to what we said? Yes, definitely looks like a crazy bubble. Let's just delete the prices once again. Where do you think the bubble has been occurring in here? All right, what actually looks pretty fucking crazy and out of any fucking sense? All right, you can definitely say, all right, this is where it got pretty nasty. Now, what do you see? Folding boxes. So are we still irrational? No, we're not. We're ranging. So we've got something to trade. We can trade. We're not definitely safe, but we can trade. Are we pretty fucking far from the moving averages? Yes, which means this range can very well break down. So we've got decent odds for us to go bearish. Still risky, so tiny position sizing. Now let's go ahead. Let's give it a context. Like we said, multiple range structure. Bubbles doesn't like ranges. All right, bubbles want to go crazy high forever. So multiple options. Either we're there, all right, like we're ready for another liftoff. But remember, like that in here, what you've seen is many range breakouts, many. But most of them was resistant stop loss. So the bulls were trying to rage the bears. It's not even the coast in here. Look at that. We've got many breakout attempts, but we had more bearish breakout attempts than the bullish ones. All right, just have a look at all of this. These are clues. All right, this means we've been looking for the bull stop loss already. Just once we tried for the bears. So in a risk assessment, I would say yes, the bears have decent odds in the current price area. We could very well reverse this range. Still, what does this look like? All right, this range is mature, as we had two opposite square triangle. That's a rule, right? Two opposite square triangle means the range is mature. So we very cautiously trade this, or we don't even trade it, we wait for breakouts, either bullish or bearish. So we know what to do. The plan today on Bitcoin is simple. Normally, the range is mature, so we can't trade. We need to know what it looks like. Right? Visibly, normally we should be seeing some trend lines emerging. I can see one in here. Definitely there is one. All right, if I can catch up on this one. There is obviously another one in here. All right, so this is our range. Looks like a bullish trend channel, right? But still, the lines are converging. All right, the lines are pointing to a direction. So they are not expanding, they are contracting. All right, so what do we do generally with this? This is an ending diagonal structure, which means this is not a bullish structure. Normally we reverse them bearish. But we need to do 3 sets of waves. That's exactly what we've done. So I'm talking to Elliott guys in here, for example. But still, Elliott or whatever this is, we can say that this range is mature. Where does the breakout occur? All right, the breakdown occur is here. We need to do this and this. All right, going in there, back to context, and then pulling back the trend channel and fucking it up. All right, option number 2, we go in here and we do just like we've done. All right, context, trend channel, but this trend channel has basically been just touched, so it's not working yet. What we need to do is a further dip. So if we do this and this can be a breakout. All right, if we just keep on going this way, I think what we're going to be doing is just going in there and triggering a selling signal. All right. If we go there and if we accelerate, you goddamn know it is a breakout structure. All right. To me, we don't have to go to the trend line. Normally, we should reject prices prior to this trend line. Because in here, as you can see, it's been a huge spark of volume in here. So there is something that has been going wrong. So I'll give you this tip. In this kind of structure, you can use the closing markets as an alternative. All right. And in here, you can see that we're trading this trend line, and it's highlighting the exact same area we're pointing to. All right. So that means we're trading with candle closes, so we can afford some upper shadow candles in this area, no problem with that. But we'll avoid having accelerating closes on top of this trend line. Okay? I hope this is clear for everyone. That is our intraday context. We're trading this area. We know it's dangerous. We do have an ending diagonal, and we're looking at this cluster area starting from 470 up to 625. Right in this area is where we're going to look forward for 15-minute signals. All right? Normally, we should expect prices to try overcoming the resistant context, so try breaking just slightly on top of 525. All right? So this is our expectable reversal area where we can speculate what is the last step we need. Hey, goddamn risk management. That's all we need. We need a signal. So first of all, going in there doesn't even nearly mean that we're going to reverse bearish. All it says is that we've got eventually decent odds to reverse if we do have a signal. But still, remember what we said, the range is mature. So you shouldn't nearly even get to take this trade. All you can do is take a tiny speculative position just in case it reverses. Very risky, obviously. What we need to do instead is waiting for this area to react bearish and to have a bearish breakdown structure. So what do we trade today? If you're a low risk profile, you goddamn do nothing. You're just going to wait for this breakout, just like we said for the SPX. All right? If you're a risky trader, a little bit of experience at least, you're going to try trading in this area, but very tiny leverage just in case. It's just because if it reverses in here, it's probably going to brutally break down the structure, and you'll have a safe position to avoid to safely reinforce any bearish breakdown we'll have afterwards. Like we said, we're in a Ponzi scheme, so if things get out of control to the downside, it can collapse pretty fucking rapidly. All right, so you might want to have a speculative trade to be able to safely reinforce down the road. All right, but only for experienced traders. Others should definitely pass on that. That's the reason why I just introduced a color code into Discord. All right, I'm going to show you what this is. All right. So I'm very active right now in the French community. I hope I'll be able to handle both communities pretty sooner. So I'll try to take care of the English ones as well. But it's hard. The French guys are asking quite a lot of questions. So anyway, the color code is this. You might have noticed that right in Discord, some people have colors for the name. Some others are just white, random white. All right, so it just corresponds to how old you are into using my strategy or learning from me. So it just basically represents a psychological state, a progress state of your understanding of the strategy and your application. It's definitely major steps, like consider learning trading as a stairwell, and it has multiple steps that you need to cross, and obviously you cannot get to the next step if you haven't been crossing the previous one. So we all start white, like, right? You're a martial art sportive. So what you're going to be doing is basically you start down the scale, and you scale up to get higher grades. So that's exactly how it works in here. You'll start white because you're just a beginner. Your goal number one, is to get to learn the strategy. So learn the PDF, make some trade examples, stuff like that. Start to understand how this thing works. All right, the strategies, rules by themselves, and the overall psychology behind the strategy. All right, you need to understand why things have been putting this way all together to make and to build this strategy. When you actually get that, generally takes 2 to 5 to 6 months, no more than that, you'll get your green color. To me, you fully understand what this strategy is, how it works, and you're able to take a slight advantage from it. Normally at this stage, you'll significantly reduce your losing position. You might be like, draw. You're not gonna make crazy gains at this stage. You're just having a tiny little advantage of risk limitation using the strategy. Still, you don't nearly understand what trading is about. This is the next step, right? When you get from green to yellow. Yellow is the guys who are here for generally approximately a year to a year and a half, depends on how fast you are. But these guys are so long enough, they totally understand the strategy, all right? They understand how it works. They've been using it for so long. They've been taking so many trades that they understand what the fuck risk management is about. What they understand is that the beauty and the magic isn't actually the market. It's just the strategy who is risk managing and bringing you the gains. You've been trading so much that normally you don't even care about what asset you're trading and what time frame you're trading. You're just looking at contexts, price filtering and risk management, and you understand that this is what makes the difference. You understand what the risk management really is, all right? But it requires a lot of trades to get there, so it requires, like I say, at least a year. At this moment, you've done the hardest, but still, there is still a lot to process, because this is where you start to learn psychology. So remember, first you start white. Your goal is just to learn the strategy rules and understand how this thing works. Then you get green. When you're green, you need to learn how risk management works by just trading, and trading again with low leverage, just for you to understand that what brings the gain, the long-term rewarding advantage, is just applying the strategy. And whenever you stop applying the strategy, you just lose this advantage. All right? Then you get yellow. When you get yellow, you fully understand how it works. You got what the risk management is. So you need to work on your latest, the remaining thing that will slow you down into profitability, which is your psychology, right? And you don't work psychology before you didn't even understand what risk management is. It really comes after. So first you understand what this is, and then you work around your own psychology. You learn to fight your irrational biases. They'll still be there, all right? They'll be dampened by the risk management, but still be there. So you're going to have to learn to get better at this. Increase slowly but steadily your exposition to the market. At this stage, you're safe. You're normally not going to be a negative trader. You're going to be a positive trader, slightly positive, safe trading. And what you're going to be doing is increasing your market exposition. You can expose your capital right now. It's normally safe. You're still going to make tiny mistakes, because as you're going to increase the leverage, you're going to see that you go back to your previous beginner's biases. So you're going to have to fight them. This is where psychology will be put at risk. You need to get better at this, way better. And that's what's bring you to the orange color, which is like top notch. And to me, when you got this, you're fully exposed to the market, your capital, you're bringing gains, sustainable gains. You've been fighting most of the dangerous traps along the way. And normally at this stage, you're almost fully independent. What you take care of when you get orange is just to personalize the strategy. You can add some spices, change some rules, whatever. At this stage, I'm fully confident in you trading alone. I know you're safe. I know you can do whatever the fuck you want. You can add any other indicator. You can even delete my indicators if you don't like them anymore. Normally, they've been there to teach you what you needed to be taught. Risk management and psychological management. When you combine those two, you're already a trader. The only remaining stuff is just building your own experience. You can fly on your own. I trust you enough for you to give trades to other people and stuff like that. Or like I said, if you think you've been learning enough and that you don't want to help others, I can understand that. You just fly away. You quit the Discord. You say goodbye, thanks Phil, and you fly on your own. I'm fine with that. All right? So that's what you need to understand. That's the final stage. This one generally takes 2 to 3 years at best, and generally no more than that. So it's not an endless learning process. The rest of this process, you'll do it on your own. Whether you want to stay in Discord with me or get the fuck out is definitely up to your own choices. But I gave you a glimpse of what the process is for you to get into the best possible way to become a trader. Not everyone will be able to be orange, let's be honest. Some people will fail in between, and that's just how life is. So I know not everyone will be able to, but I strongly do hope that I'll do my best to bring most of you guys to this finale target. So what I'm going to be doing after this is, you know, I've been trading some trades recently with you. So I've been sharing some scenarios throughout the swing alerts and intraday alerts things. What I'm going to be doing right now is I've been introducing four other emojis. Like I'm going to be using, you'll be able to use them as well. All right. These are normally they should be, all right, they should be here. All right. You've got pro indicators, personal emojis. So these are the 4 color codes, just like the names. All right. So what it's going to be meaning is that whenever I'll share a trade, right, starting now, right, each and every analysis or new trade will have a color code right before it, all right? When it's white, means, all right, everyone can listen to this stuff. It's for everyone. It's basically basic standard knowledge about the strategy. So everyone who's white really needs to watch this. The guys who are pretty much orange, they don't nearly give a shit. It's way beyond them. They are way beyond that, but still they can have a look, all right? It means higher is okay, lower is okay as well. We'll see about that. When I put you a green label, or I don't know, call that however you want, right? When I put that green, what it will mean is that this is meant to teach you risk management. Remember what you're leading to when you get a color. White, you're leading to learning strategy. So I'm going to give you trades that are just highly technical and technical areas and stuff like that for you to trade in. Green means, all right, this is an area to trade, but this one is a little bit riskier than the average trade, so there is going to be an appropriate risk management to do there. So it's going to teach you how to place the different cursors. Higher level of risk, therefore it's a riskier trade, therefore you need to adapt. Reduce aggressivity or reduce money widen the money management, stuff like that. It's just for you to understand how the risk management works, that this is not black or white, this is just shaded grays, all right? So these are the kinds of trades. When you see a green label, the white guys will be eventually able to get to follow this trade, but they need to be aware that this is risky for them because they're not prepared for this. They're not yet ready for it. Still, if they want to take a high level of risk, I said okay for just 1 grade up, all right? If you go 1 shade to the upside, I'm okay with that. But still, high level of risk, you need to understand how it works. Lower the fucking leverage. You take a trade that is higher level of difficulty than one you currently are. What you do? Minimum leverage. You take like 1 lot, 1/10 of a lot. You take the minimum possible leverage you can do. So you're going to feel the emotions, you're going to feel the trade just like others, but you're not going to expose your capital because that's not the goal. You're very likely going to end up having some personal biases or making mistakes. So the goal is for you to eventually make those mistakes, learn from them, but they must absolutely not cost you a dime. That's really important for you to understand. Not a cent should be lost out of this. If you take a loss, it must be like 0.5% capital lost in this. That's a good lesson. You tried harder and you just failed. That's no big deal, all right? But if you end up losing 5, 6, 7% losses into such trades, God damn it, no. You're here to learn, so you try to go harder, but you shouldn't be even suffering from such kind of losses. Then if we go yellow, these are psychological trades. These are especially for the guys who are either green, and if they take the yellow trades, they'll have to do just like the white before. They need to take the minimum amount of leverage that will help them stepping further away, stepping further, oh my God, I can't find this word. They can try going ahead for more difficulty, but same thing, minimum leverage. What do you think the white guys are doing when this is a yellow signal? They don't even trade. That's 2 steps away. You don't nearly give a shit about psychology when you're just trying to learn the strategy. Psychology will come after. So don't rush things. If you try to go too much difficulty, you're just going to end up with a nasty problem. Yeah, just look at Bitcoin. It's going straight into the expected area. So, and obviously, these trades are going to be coming less often, but when we get to orange trade, same thing, all right? The green, you get the fuck out of here. You don't even follow what's been said. The red, the yellow guys, you can go ahead, but you go safely, low leverage, all right? You got the point. I'm going to be doing this stuff, and obviously those orange trades will be meant to force people to take more risk, to force the orange guys to get to personalize the strategy. I'm going to give them into the highest level of risky trades that only me will take. So, all right, when I get orange, it's just me, the orange guys. It's just to push them into danger areas they're not facing anymore. They're not yet facing. It's to push them toward the best, just like that. Only the yellow can try risking these areas, and no more than that. All right, so that's what we do on daily. Right now on the daily chart, we're trading definitely orange. All right, what we're trading in the H1 is pretty much I would say yes, it's yellow to green. All right. What we're trading, yeah, on H4, H1 time frame is yellow. What we're trading what we're trading today in 15 minutes is green. Okay, which means we're just applying the strategy. It's a bubble, so it's dangerous, but we're not in a bubble in here, right? The 15-minute context is just a range, so it's definitely green. But you need to be aware of this on the overall context, all right? The overall context is dangerous, so you certainly don't fight the market in this area. If you get to be stopped out, take the fucking trade out and don't fight. All right, I hope you're gonna like this color code. So starting from now, any new notification talking about any trading activity or whatever is gonna have its color code right next to it. Bye guys, hopefully see you tomorrow with an order book so we can work out scalping.